Thank you, Mr. Chairman. Mr. Ullman, good morning again. Well, yeah, listening to the witnesses talk about increasing a benefit. Increasing benefits almost always sounds good, especially if there's no downside or cost associated with increasing the benefit. With the FDIC, if you increase the amount of deposits that are exposed to insurance, then you have to increase the amount of a percentage of those deposits held by the FDIC. And so there's always an offset to the new benefits. Someone has to pay for it. That's kind of how I see the system. That's how the system works. So let's say we were going to increase the amount of insurance from $250,000 to some number, any number, but a much higher number. That doesn't come in a vacuum. It's not an isolated incident. When you increase something, you're going to decrease whatever it is in that marketplace called reality, where folks who want to have access to more loans, more opportunities, more small businesses, whatever it is that you're going to do with the money that's now held as an insurance policy for the failure of whatever it is a cost associated with it. Consumer confidence, of course, is paramount. We're trying to figure out how to thread that needle. It seems to me, though, that there is no increase without an expense. Can you talk to me a little bit about the positives and the negatives? Do the benefits outweigh the downside?
Sure. There's always, I think you're getting into the crux of the issue here, which is that deposit insurance provides some financial stability, right? It helps prevent bank runs and overall can increase the confidence in the banking system. And that's the positive side of deposit insurance. The other side, though, is that, as you point out, there are the costs. The first is clearly the additional insurance premiums. Remember, these insurance premiums also have to be priced according to the risk, so that there really should be kind of no free lunch, to use the old Milton Friedman phrase, that it covers the full cost of that insurance that's provided. For some banks, though, that cost is just simply not worth it for their business model. Two is the other kind of distortive effects that guarantees like deposit insurance can just play in the financial system. And that's kind of creating the moral hazard. It reduces the risk for other participants in the financial system to do their own due diligence. And as a result, over time, that lacking proper risk management can lead to additional bank failures and larger losses. The history of the S&L crisis is a great example to always remember that if the deposit insurance and overall regulatory policy gets the incentive structure wrong, so it can create severe moral hazard and result in banking crises, and frankly, this institution having to write a big check. Because at the end of the day, taxpayers are behind the FDIC. So everything we do also has to be kind of very mindful of the moral hazard risk that you potentially are creating.
And I'll say I certainly have received dozens and dozens, if not 100 phone calls about different scenarios on how to increase the deposit insurance. It's in a scene. Maybe you've received a call or two? Yeah. A lot of ideas out there, and perhaps some even merit consideration on ways to do so without necessarily increasing the deposit insurance, but taking away some of the percentage increase on the deposits held beyond the 250. So really interesting ideas out there. But one of the questions I've come to want to ask is on the commercial exposure versus the individual. Mm-hmm. Some have suggested we maybe bifurcate the FDI insurance, and there are some depositors that have so much in the deposits in their accounts that they need a special kind of FDIC because of the commercial relationship that they have with their clients, customers. Any thoughts on that bifurcation, if it's possible? Is it smart?
Yeah, we have it a little bit already because the limit for 250 is far in excess of what the average Americans have, which is a little over $40,000. So for the vast majority of Americans, deposit insurance works very well, and I think that's again a bedrock of our financial system. Most Americans, I think, don't have the ability to monitor their banks as effectively as other market participants. However, larger corporations, investors, other banks do have that capability, and that provides a strong market discipline on banking or banks, and I think that is actually a good thing for good bankers too, right? Good bankers have a reputation for effective risk management, and that attracts those customers to those banks. And one thing, the kind of cost you have to watch out for is increasing the deposit insurance can also create competitive disadvantages in the marketplace. Again, bankers who are good at risk management can compete on that fact. If you, say, went to a system where you had unlimited deposit insurance, the only way consumers, large or small, sophisticated or unsophisticated, would determine would largely be on yield. That can create a very perverse incentives for institutions, particularly those may be troubled, to raise interest rates to attract deposits, and then if they ultimately fail, again, that's a larger hit to the deposit insurance fund. That's a little bit what happened with the S&L crisis.
Thank you. Now, I know that the chairman went over by about 4 or 5 extra minutes, so I won't do that to you all, but just...
Nice try.
Yes, thank you very much. You got to try something here. So just for a perhaps not even a response, just I'll throw this out to the panel, and perhaps we'll answer it at another time. The bank run that was created in part by social media is something obviously we had never seen before. $40 billion in 24 hours. I think the last time we saw a bank run, it was a third of that amount over 6 weeks or so. I'd love for us to contemplate what types of changes that are necessary because of technological evolution that we're seeing in this nation and how we try to insulate our financial systems going forward. But, Chairman, because I'm very sensitive to time and going over, I'm going to stop there.